Have you ever wondered why, in a world where every digital footprint is being mapped, cataloged, and monetized, one asset is being systematically erased from the major financial maps? Is it because it's dangerous, or is it because it's the only thing that truly works as digital cash? Imagine a world where your financial history is not a public record for any chain analysis firm to parse, but a ghost in the machine. Today we aren't talking about simple price action or chart patterns. We are talking about the censorship premium, the inevitable economic force that occurs when you try to ban the unbannable. Could this pressure cook the price of Monero XMR toward $3,000? Let's strip back the hype and look at the plumbing. If you think privacy is just for those with something to hide, you have already lost the argument, and likely your financial autonomy. By this video we will move beyond the shallow moonboy analysis and understand the mechanical, structural reality of the privacy coin market. You can expect to learn why Monero is far more than just a private currency. It is, in essence, a sophisticated chain-hopping utility designed to obfuscate transaction histories, effectively acting as a high-velocity financial reset button. We are going to explore the bull case, why a $1,500 to $3,000 price point is a rational outcome when global surveillance reaches its peak, and we are going to contrast that with the plumbing risk. We'll analyze what happens when the liquidity rails are ripped out by centralized exchanges like Binance, OKX, and Kraken, and we will dissect the looming regulatory shadow of the European Union's Anti-Money Laundering Regulation set for July 2027. Liquidity is the oxygen of any market, and if you cut the supply lines, you don't just kill the trade, you create a violent, volatile vacuum. Why $3,000? To understand the price, you must understand the demand. We are entering an era of unprecedented global surveillance, where financial blacklisting is becoming a standard policy tool for governments. When a transparent blockchain like Bitcoin, or even a regulated stablecoin, can be traced, flagged, and frozen at the wallet level, the value proposition of a truly fungible asset skyrockets. Monero thrives on the censorship premium. Think of this premium as the market cost of avoiding unwanted eyes. As corporations, high-net-worth individuals, and everyday citizens find their funds flagged or their access to traditional financial rails restricted due to arbitrary policy changes, they move to the path of least resistance, the privacy layer. When the cost of being transparent becomes a liability, resulting in account closures or asset freezes, the market will demand an alternative. XMR is the only liquid, battle-tested, default private digital cash that functions without a trusted setup. When the demand for privacy spikes, it doesn't move linearly, it moves in sudden, liquidity-starved shocks. That is the premium. In a transparent world, privacy isn't a feature, it's the ultimate scarce resource. However, we must be cold-blooded about the risks. The plumbing of crypto, the centralized exchanges, is currently waging a war on privacy. When major platforms delist XMR, they are effectively trying to seal the exits. This creates a fascinating, if dangerous, phenomenon. We see violent wicks. Because liquidity is thinning on the centralized exchanges, small buy orders can cause massive, parabolic upward spikes, while sell orders can create flash crashes. The plumbing risk is that if you cannot easily exit to fiat, the real-world utility is hampered for the average user. But here is the irony. By forcing the market off centralized exchanges, the industry is unintentionally building a more resilient, decentralized, peer-to-peer infrastructure. We are seeing the rise of decentralized, non-custodial exchange platforms specifically built for privacy coins. The plumbing isn't breaking, it's just moving into the basement where regulators can't reach it. The volatility we see today is just the market pricing in the friction of this transition. The European Union is about to learn that you cannot legislate away a protocol, but you can certainly accelerate the adoption of a black market. The European Union's Anti-Money Laundering Regulation (AMLR), fully hitting in July 2027, is a watershed moment. By targeting privacy coins and effectively banning them from obliged entities, like centralized exchanges, the EU is attempting to create a surveillance-only financial zone. They want total visibility. But what happens when the most advanced regulatory bloc in the world declares a digital asset Persona non grata? Does it vanish? History tells us no. It simply moves to the shadows. By labeling XMR as illicit, they are inadvertently providing it with the greatest marketing campaign in history. It validates the coin's utility as a tool for financial sovereignty. This will likely trigger a massive bifurcation: a compliant, regulated, monitored financial system and a parallel, private, resilient, and non-compliant system. If XMR remains the primary tool for the latter, its value will be defined not by how many exchanges list it, but by how badly the world needs an alternative to the surveillance-first banking model. Knowledge is your edge, and in the world of privacy, the person who tracks the signals before they become trends is the one who wins. If you want to track the path to $3,000, don't look at the charts, look at the reality. Here is your dashboard. 1. Access friction. Are there new, easy-to-use decentralized interfaces for XMR? If the on-ramp becomes easier while exchanges remove it, the bull case holds. 2. Privacy demand outside crypto. Are non-crypto entities like VPN providers, encrypted messaging apps, or international trade businesses increasingly quoting prices in XMR? 3. Tech credibility. Watch the protocol upgrades. If Monero continues to harden itself against chain analysis and ASIC mining remains truly decentralized, its technical moat remains unbreachable. 4. Exchange ghost volume. Track the volume on P2P platforms like Havino. This is where the real price discovery is happening, away from the manipulated centralized exchange order books. 5. Regulatory backlash. Watch the specific wording of the 2027 AMLR enforcement. If it leads to a total ban, look for a surge in demand as people realize the official channels have officially closed. The path to $3,000 isn't about hope. It's about the increasing demand for financial autonomy in a world that is trading privacy for convenience. The plumbing is shifting, the regulatory walls are rising, and the premium for true privacy is only just beginning to be priced in. If you want to stay ahead of the curve and navigate the complexities of this transition, make sure you hit that like button and subscribe to the channel. We are tracking the intersection of policy, technology, and economic reality so you don't have to guess. Stay informed, stay sovereign, and I'll see you in the next analysis. Take full control of your crypto with Ledger Live. Manage thousands of coins and NFTs securely in one place. Buy, swap, stake, and grow your portfolio with ease. Trusted by 7+ million users, Ledger Live keeps your assets safe by integrating with Ledger hardware wallets for maximum security. Say goodbye to third-party risks and hello to true financial freedom. Download Ledger Live now. Click the link in the description to get started. Crypto taxes don't have to be a nightmare.
Coinly
Coinly calculates your taxes in under 20 minutes.
No spreadsheets,
no spreadsheets, no headaches.
Sync your crypto assets
Sync
with
your
one
crypto
click,
assets
whether
with
you're
one
trading,
click.
staking,
Whether
or
you're
using
trading,
DeFi.
staking, or using
Import
DeFi.
your trades,
Import your trades, track your portfolio, and generate ready-to-file tax reports effortlessly.
Join thousands who trust
Coinly to simplify their crypto taxes.
Make tax season
stress-free.
Click the
Click
link
in the description to get started with Coinly today. The information contained herein is for entertainment purposes only. Nothing herein shall be construed to be financial, legal, investment, or tax advice. The content of this video is solely the opinions of the channel owner, who is not a licensed financial advisor or registered investment advisor. Trading cryptocurrencies poses a considerable risk of loss. Please use your best judgment when dealing with cryptocurrencies and don't invest money that you cannot afford to lose. The channel does not guarantee any particular outcome.